Hi everyone, my name is Simon Michelle from Optimised Accountants, and in this video we're going to be talking about limited companies, and we're looking now at multiple company rules, associated company rules, if you will. This is complex, okay, so strap in because we're going to go into through lots of detail, but it will help you save a lot of tax and hopefully demystify what many accountants will get wrong, and indeed HMRC will be confusing in terms of its interpretation. So let's get into this. If you're looking for free tax online calculators, feel free to go over to our website and use our free calculator, whatever you need to use. This one, we're talking about corporation tax, and maybe that's what you need. Use that QR code, or there is going to be a link in the description box below. All right, so 2023 UK corporation tax, there's been lots of changes. And as it says here, UK corporation tax has changed. By golly, it's changed. You now pay 19% on profits up to £50,000, but you then pay 26.5%. I know there's been some disputes about this calculation, but trust me, it's right for any profits up to 250,000 if you earn less than 250,000 profits. But if you are a large company earning more than £250,000 worth of profit, you can pay 25% tax. But there's a complication, and a huge one, which many people will miss and pay a lot more tax. And I'm going to go through an example on that. If you're looking for US international tax advice, feel free to use that QR code shown on the screen. Okay, so UK corporation tax rates, first £50,000 is 19%. But then if you earn up to £250,000, you would then fall into this 26.5% rate, which is shocking. And then you have profits over £250,000, you pay 25% corporation tax, which is a 6% increase from the 19% tax rate. And again, need some advice, use that QR code. Okay, so now what we've got to look at is this 19%. Is it? Not so fast. There is a trip here. So it says here 19% tax rate on the first £50,000. Now you're kind of thinking, Simon, get on this, because we already know at this point. So where are you going? Well, if you have multiple companies which are deemed to be associated, and associated means you, the shareholder, or they are connected in any way at all financially, they all become associated. So if you have, let's say, 3 companies, then these rules will apply to you. In fact, you have any multiple companies, 2, 10, 20. I know clients that have got 10 limited companies, and they're going to be hit by this hard. So you do need to worry about this. Okay, so I'm going to break this down just to make it a bit easier to understand. Now feel free to rewind it, pause it, do what you need to do, but ask your questions in the comments box below. First company, we've got these tax bands. I'm not going to go over that. You know what these rates are. I've just told you. However, we've got the before and after, which is before you had this profit of 150,000, you paid this 19% tax. You've got this 28,500. Now, the thing for me here is that you've got this increased tax in this new rules. So you've got this 19% of 50,000, but before 2023, you was taxed at 19% full stop. There's no issue. Now it's banded. All of a sudden, you could be faced with a rate of 19% up to 50,000. And then you've got this 26.5%, which means you've got tax now of 36,000 versus 28,500. But this is where it gets complicated. And this is where I said, strap in. I mean it. This is really tough to take in. We know that there's the banded rates, as we've just talked about already. I'm purposely repeating it because I want you to see it. Okay, so I want this to go through, write it down, do whatever you need to do to really understand it. I know you're not accountants necessarily. Even then, you're going to be paying more tax. Okay, so I'm trying to help you to work this out, and then work with your accountants, tax advisors, or if you are an accountant, to be more aware of what's going to happen. In the future, those tax bands are going to be very, very different. So you've got the 19% tax band. What you'll notice is that we're dividing that £50,000 by those 3 companies. So if you've got 3 companies, as an example, you may have different number of companies. You may have 2, 3, 4, 5. This is an example for someone with 3 companies. And that 19% tax band, which is normally 50,000, is divided by 3 to get 16,667. The upper bands of the 250,000 is also divided by 3. So all of a sudden, you could be in a position whereby you have profits that normally would be taxed at 19% if you've got profits of, let's say, £30,000. But because of this associated company rules, you got 16,667, which is taxed at 19% and 19% alone. But then the rest could be taxed at 26.5% because you have multiple companies. And this is whereby the companies are trading and active. Okay, so it doesn't really affect you if you've got dormant companies or holding companies that is just holding shares of other companies. Okay, if it's got any activity though, it's no longer just a holding company, it is active, and therefore it can be affected. So there are many people out there, and this is what frustrates me, is there are many accountants out there that have said to landlords or business owners, you must have a separate limited company per property. Wow, mistake. Because now if you've got 10 properties and 10 limited companies, all of a sudden you've got to take that £50,000 up to the 19% tax band, divided by 10, you're only allowed £5,000, and then anything excess will be taxed at 26.5%. Ouch. Before April 2023, you would only pay $28,500 because it was all subject to 19% tax. However, after that, you've probably been seeing my other videos thinking, well, okay, cumulatively, £150,000, I'll be paying £36,000 worth of tax. Okay, I understand that. I've got to save some more money. Not so quick, because if you've got multiple companies that are associated in any way, then you could be paying a situation of $42,875. Whatever it is, it's going to be more than the $36,000 that we just shared with you, which means that is going to be heartbreak for many of you when you get your corporation tax returns from your accountants and tax advisors, especially if you're not being proactive or they've not been proactive talking about the structure of your business. Now, if you want to get some currency rates, feel free to use that. If you're going on holiday, buying businesses or property abroad, then hey, use that QR code to save yourself some money. Before it's too late, what you need to do, okay, is close down small businesses. If you've got some stuff going on with eBay, I know there's a lot of people doing Amazon, eBay, selling, whatever. It's not making much money, but they've got this limited company. It's a tiddly amount of £2,000-3,000. I'm not being disingenuous, but if you've got multiple companies, one of them is pretty large and doing well, and you got this small fry business, actually you just need to get rid of it. Okay, just stop it, because you'll end up paying more corporation tax than the profits you're making in the eBay, Amazon reselling business, for sure. So, and that's even if it's making a loss. So it's not doing you any favor. Some of the things is amalgamate some activities. So could you move this activity within the same company, reducing the number of companies that you have? Maybe. Use group structures, holding companies. Massive, 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 something you should be doing right away. I'm going to be doing lots more videos about holding companies, what they are, how it benefits you, etc. But if you're not doing this and you've got 3 companies that are all owned by you, there are loss reliefs that you could have claimed, but you can't because it's not part of a group. Okay, so that £25,000 loss that we saw in the previous example can't be offset against the other businesses because it's not part of a group. So you really need to think about this. Okay, and what are the numbers? If you've got multiple companies, you need to now start thinking, well, this is a profit I've got from one company. This is the amount of tax I'm going to be paying. This is about extra amount of tax I'm going to be paying. How can I mitigate that? How can I work with my accountant to do that? And funny enough, a lot of this information I'm sharing with you came from my own accountants to talk about associated company rules, which a lot of it was a bit of a shock to me as well. So it's going to be a shock to you. So get some tax advice. Make sure that you understand how much more you're going to be paying and find ways to reduce it.